Yo, what is good, High TF Mob? It is your boy Booba back with another video. Um, I know this Sunday analysis was supposed to go up, but I actually got a little busy yesterday, so I ended up pushing it to today, which is okay because again, like I said in my past videos, Sundays are more days, more relaxed days in the market. It's still the opening of the week, and you're just kind of wanting to watch what's going on rather than act on what's going on. So what I wanted to do today was go over the 1 hour breakdown frames because I know I left all of my high time frame lines the same. I'm going to be kind of going off of pretty much last week's movement going into this week. And I'll be basing all my decisions again on those lower frames to find the pocket moves of the week. So what we'll be doing is going through my main pairs again, and we'll work from top down just to see what is happening. That's a good sell that happened over the weekend, but we'll work for the top down to see what the candles are doing again. And then from there, we'll dissect our 1 hour. We'll clean off everything I had from last week, and then we'll start fresh this week. So again, we have the same monthly candles that we're working with. This was a great reason why AU decided to sell down was we had the retrace already happen with the monthly at the start of the month, which was May 1st, and we are now at May 9th. And look where we are now. So like I said, price was going to pull against this large candle, but we just didn't know how high. And after last week's review, you got to see how those movements happen. So now we're here at this level, we're near 70K flat. So what I'll be looking for is more sells into this candle to complete the structure that we see overall happening on the monthly. So right now it's looking like we are trying to break this previous level or previous low to start a new price trending structure to go down lower for these wicks. And that is if price decides to respect the information we see on the low frames for that to happen. So I'll drop to the weekly now. So this is our current weekly candle. And some of this movement actually happened over the weekend as far as the sells. It's also possible that the movement down happened. Hold on, let me see something. So last week we had an upwards movement. Price came down to this low and then ended up closing around here. So this week we had the open happen up here, which meant that there was some retracing happening over the weekend. So the market decided to open up here, and now we continued down from Sunday. So this is, again, why I look at the candles from the top down, because if you understand how to read candles, you'll understand that when a candle opens and how it closes determines whether it'll be a buy or sell candle. And for the buy candle, it'll always start from down here. It can make a movement down, but ultimately will end up closing above where it opened. And then it could also spike a little bit higher, but end up closing a little bit lower than the peak that it reached. And then vice versa for a sell candle, it's the same motion. It could go up before continuing down. And then same thing, closes down low. And it could also have a peak low before closing just shy of that. So that's what I'm looking for out of all the motions in my candles. And now just piece together the puzzle. So we'll go down to the daily now. We already have our TP lines still the same. We're headed towards our TP1 on the sell side. And again, since we're looking for pocket moves, if I see on this daily candle right here that price open up here at 4 on Sunday and decided to sell all day pretty much yesterday going up until now at 8:30, we will basically be able to use the 4-hour candle to determine whether that next daily candle wants to build up a structure to push lower. If in my experience of swing trading, I'm not going to lie, this would be a very obvious long-term sell down. But if you're, again, trying to get those pocket moves, your timing is very important on when you're getting in so that you're feeling comfortable going into these trades. So selling on a candle that's buying on a 4-hour wouldn't really make sense. And you'd probably want to wait for something more clear to signal that it would go down, more like a break of structure. So like a motion like so, where you had the buy happen, couldn't break, it couldn't continue buying up to break this high. And then you had the price come down past this, come back, and it broke structure, signaling that we're going to sell down. So that would have been a good time to get in, which is why I left that sell there just to see what would happen over the weekend. Because sometimes I like to just leave. If you're like, that's also another tip I could give you, is that if you're new and you don't trust this information, or you feel skeptical, you don't even have to put money in this market. Literally just go on the charts. You can go on TradingView, make a free account, just mark up the charts how I'm teaching you, and then just leave these little long and short positions, which would be the tool right here, long and short. So you just leave them and then just watch it. Just watch the market and keep applying what I'm teaching you. And then that way you can see for yourself if you'd be willing to want to invest your money into any market. And again, I've said this strategy doesn't just work for Forex. It works for stocks. It works for cryptos. It works for every other market out there, indexes, indices, all of it. Because once you understand how candles move, then you understand where they can be applied to the fundamental information you can get off the internet. So now I'll drop to the hourly. We'll go ahead and clean up here. So again, I like to start fresh with all these low frame information, just so that way, again, I'm going with the outline. So we'll delete this even, take off our daily open. Okay, so now it's a little bit more clear. And we can see now that we're at our weekly low. We're about to potentially break out of the weekly low to continue lower. And if we get rejection here, there's a chance that we come back up for the buy on the TP1, on the daily candle, or the daily chart, excuse me. So what I'll be looking for again is our swing highs and our swing lows, our anchor points. Keep it simple. So our swing low now, because this previous one got broken, is now right here. And whenever that happens, I like to trail it back to what caused that to happen. So our previous peak high was right here. So this would be our swing high. Boom. All right. So now we have that. And because we're in a downtrend, I like to use my retracement fib. Again, I'm not going to go into much detail about what this fib really means, because it's information that I received through the academy. So if you guys are interested in that, definitely feel free to follow me through that. And I'll give you guys more intel on different sets of information that I actually know that that can definitely go in depth about. So here we have, okay, let's go back. So we have our pools of liquidity, is what I like to look for next, because again, these are targets that the banks like to go for. So here's one here. Real quick here. Boom. Boom. All right. And then looking to my left, it's probably gonna be on the far side there. So that's actually perfect. So when that happens, if I'm on the hourly and I know that we're moving into a zone where I can't really look to the left, the immediate left, to find pools of liquidity, that's kind of giving me more signs that the term would be called high time frame override. It gives me more confirmation that a high time frame override is more likely to happen. So high time frame override is basically what this whole strategy is once you understand that high frames hold more weight, you can time the small frame signals to allow you to get into that. So here, I would now start looking for pools of liquidity on the higher frame that would be associated with why that movement would be happening. So here, we know price is up here because of our gray line, or our dotted line that marks it. And now we know we have pools of liquidity here. Money left behind here, basically. And again, we're always targeting the bottom side right here. Boom. So if you're selling, you're targeting the bottom sides of your liquidity. If you're buying up, you're targeting the top sides of liquidity on the opposite side. You got another pool right here. So the way I'm doing it, I know a lot of people like to use trend lines. That's okay too. I'm not opposed to using trend lines. I just like to have everything horizontal so that it helps me have more of a clear, concise idea of what was going on in that space. So a lot of what I like to do is what helped me in the academy is they explain you can use the double tops and the double bottoms as situations where price was being manipulated. And clearly you can see when it bounced twice here, bounced twice here, it was creating this range. And when price finally broke out the range right about here, it came back and tested the top side of this pool. Again, trading is not picture perfect. So this was a test, double or triple bottom here. And after that third touch, it wiped out this pool up top. And then it had another retest right here. So that just helps me clarify that. But any other trader could have been like, this is all consolidation and this is an ascending triangle, which means price was just rising. And every time it came down, it didn't come down as far. So it kept doing that into one specific level. And then the buildup caused the price to break through. So you could look at it that way. That's not against, it's definitely not, I'm not opposed to that. But again, I like to keep it in a way where it's segmented. So I feel like I'm completing a puzzle, whether I'm going up or down. So here we have our top side of liquidity. Boom and boom. Okay. And now this is why this would be a good TP1 zone or a TP2 zone at this point. Let me see. Hold on. Yeah, that would be our TP2 zone there. Interesting. Yeah, there you go. I don't know where the number went. That's weird. That's weird as hell. All right, it is what it is. Maybe I just didn't put the line label there. It's all good. Okay, so that's our TP2. So that's a good spot to shoot for after price shows us a certain reaction after this buy. So again, we like to use our 4 hour to get in. So it is 8:44 a.m. Dropping back to the 1 hour. I would be looking for sells anywhere in this zone. Again, if you're looking for, if you understand institutional blocks or order blocks, you'll understand what I'm going for, what I'm looking at here. Or real rise blocks. That's what I use through the academy. So here we have that. Then we have this potential point of interest. So these are just points of interest that I would wait for price to get to look for any type of reaction that plays a part in my puzzle. So clearly we can see there's this buying here. If maybe after 12, we see price bearish here again, I could say, all right, this is a valid sell down. But again, there, like I said, there's a very, very specific way the academy gets into their entries for their trade, which I do know how it goes, but it would be, it's not my information really to be sharing without knowing if I can or not. So, and again, that's stuff that they teach. So here we have the 4 hour, looks like it's rising. And I think for me, I will wait that out. So I'll look for a position either here, depending on what type of reaction is happening. And then I'll look to take that down to TP2. And notice that I was able to squeeze a position there. And a lot of that is because if this is my point of interest, I like to look for tight entries. So I'd like to have the stop loss just shy above the block there to make sure it has a little bit of room, and then we'll see how it plays there. And it also allows for you to have a stronger risk to reward like that. So I'll be waiting on that confirmation there. We can drop down to the hourly just to see what the structure looks like. And again, it's bottoming out here. So price is looking bullish for a little bit. In the next hour at 9, if the price closes bearish, that could be a valid entry actually. So, because this is the time to be looking for our entries. And the other position I would look for if it were to continue back up would be up here. And then I would look to take it down. Okay. So ideally what I'm doing with this fib is I'm looking for price to come back near it for a potential entry. And if it doesn't, I will use these blocks to kind of continue that move down. Now we'll move down to AJ. AJ, I'm actually in right now. This is one of the trades I saw. I saw this Sunday. And again, I always say, go off your experience, go off of what you know. And I know based off looking from top down, again, these are the same lines, haven't touched them, and we're going on 2 weeks now. And based off my map, I knew price was looking bearish on the weekly, but I wasn't sure about the monthly candle. So the monthly candle through 2 wicks already telling me price was rejected at our weekly high. And this is our third wick going up. So in my mind, I saw it as we may just sell right into the move at the start of the week and probably get some type of buy movement later in the week. That'll wipe out everything, because then that would play into this monthly candle wanting to continue to the left side to collect the profits left behind here. So again, if you're in fundamental analysis, having the map and then having the information, it's all the more better, because then you're having the information that tells you what's moving the market. And then you also have the information that's literally showing you what's happening right before your eyes. So here I could go to daily now. And we saw last week, those buys were what played out. So this was one of the buys I got into. And now I saw they rejected coming out of last week. And then the continuation happened over the weekend. And now we're kind of coming to test this previous low. So this is why I was looking at this as a potential entry zone, because again, if I drop to the 4 hour and the hourly, the 4 hour, this is one of these trades where I don't really have to move the 1 hour information, because it's all still relevant. Nothing really was needed to get redone. And I saw this as a consolidation zone, or also that same kind of descending triangle pattern where price, every time it came back up, it couldn't go up as high, insinuating to me that price is going to sell. So price did it again. It bought up, and I put my level here because I'm like, okay, if price is going to respect that pattern of doing that, I'm expecting them to come wipe out this low. So if they wipe out the low, that's telling me the trend should be shifting, and this could be a new flip zone, which would allow me to probably get in another position here at 3 to 1, take it down to the 1% or TP1 here, and then so on and so forth. So right now, if I go down to the 1 hour, we can just see prices respecting the block, and it's just consolidating. So just going to kind of leave this here, there. There we go. And we could also look at this as another liquidity zone. So right here, where price could be leaving more money behind. So if price respects, let's see, liquidity top, let's go liquidity. Okay. So if price were to respect that previous daily candle low right here, that would tell me that now we could be looking for long-term buys that would be playing into that monthly candle. But right now, I really don't see that happening because of just how the structure of the weekly looks. This just looks like this week, we're probably going to get more continuation to that downside. And again, if you like your trend lines, this is a prime example of another reason why this could play confluence into market structure. So yeah, price come down, create this low, then it created this high here, then it created a higher low, a higher high. Now here's their higher potential higher low. And again, you would have that trend that got created right here. And this would kind of play a part into the bigger frames consolidating. So it would look like this. You would have your bear flag, and now you're getting the breakout of your bear flag. So if I wanted to, I could simply get a tighter entry here, just knowing that I'm playing into that structure. And I could put my stops right here now. And then if price moves in my favor, just move my stops to break even. I'd move my stops to break even once price broke this low. And then I would just wait to see what happens. So that could be another double entry there for a really good sell setup. Okay, so again, it's how you guys want to see it. I'm using the liquidity pools on the 1 hour so I can find more confined moves. And knowing market structure is so important. So if you guys want me to do a series on that type of information, like the beginner level information, like how to read candles, market structure, trends, like how to use the tools in here, for sure, let me know that. And I can definitely go that route and just start a series on that, and just I'll create a playlist and we'll go from there. So now that looks all good for me. Again, we had our situation here where, let's see, we have our swing low. It's not our flip zone just yet, right? We're going to keep it that way. So our swing lows here, swing highs here. Price, if we were to wipe this out, we know this is still our swing high. We're going to create a new swing low. And then we may get that test back up here, which would probably happen around the block again. If it doesn't happen around the block, it'll probably consolidate after breaking through, and it'll probably consolidate at this level to build up and break through your TP1 down to TP2. And that's when we would start kind of looking for the buys that would play into our monthly candle again, which would be right up here. So again, price is exhausted. And also this helps, again, using your EMAs, using some indicators that can help you better clarify what's happening. So I turn it all back on, and now I can apply the confluence to everything. So again, our blue line is below our red, telling me we're in a downtrend, and looks like we're about to cross over the 200 line. So if it crosses to the underside, we know we're in a downtrend. So you'll see every time price is above it, it stayed above it. And every time price pulled near this 200, it bought away from it. And this is why I have the 8 and 14 as kind of like training wheels to just show you that, okay, this is the timing to buy. Like, okay, this is the timing to buy. It's not until they cross that you should start looking for sells, like it crossed up here. So, and now it looks like it crossed back up here. And now it looks like it wants to continue. So we'll see what's up. And now let's take all this off, because again, I like to honestly trade naked charts. I'm not a big fan of having a bunch of indicators and stuff. I like to just use the information in lines I know to place to have better meaning. So UJ, this was still buying up actually. And again, like I said, this is kind of like one of those similar situations with AJ where it could continue up. It's not out of the equation at all, because we're still kind of dealing with that monthly wanting to be bullish. And like I said, on this left side, there is more price up here. I just don't know why they're not showing it. But there is more room up here that money was left off from this push all the way down. So they could be going up for that in the meantime. But I'll keep a close eye on this as well, because looking at the weekly, it looks like it's just really overbought. It hasn't really had a moment to breathe besides just throwing consistent wicks. So this could be the peak high of all of this that would cause that big reversal move down. And then we'll probably get some type of consolidation to retest the previous high that we left back here. But if not, again, they're just collecting pools. That's what we would call a high time frame override. And that's why we would know the monthly would be throwing confirmations on a daily like this to make it keep going up. So that was why last week I was talking about there was a potential buy opportunity, and I ended up closing before going into the weekend, because again, I don't like to hold my positions into the weekend unless I was already in a solid position at like the top of the week. And I know that the formation is trying to finish out. So here, if I go to 4 hour, we'll actually wipe these lines. It's pretty old here. We'll take off the blocks. Okay. As a matter of fact, I'm doing this a lot harder than I need to. Let's go this route. There's an eraser here, so you can just go ahead and click everything off that you need to. Let's go down to the hourly. Boom. 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 All right, there we go. So again, we had our peak high previously up here. Peak low was previously down here. Peak low caused that high to get wiped out. So now this would be our swing low. our hourly got wiped out right here. So this is very, actually, probably just tested. Looking at this now, it honestly looked like it just tested. And I wouldn't be surprised. Hold on. Okay, if I line up my dotted line, that's a straight line across, and it broke just slightly, but it's up in the air for now. So this is again where you would use your 4 hour to play confluence, right? So if it were to actually sell down, and this is our current 4 hour candle, we're only about 1 hour into this candle right now. So around the second hour, we can look at what our second 1 hour candle looks like. And if it's looks like it's rejecting at this weekly high, we can assume that, yeah, this would be a good time to catch this sell at the very peak high that would let us wipe out all of this money back here that was left behind, which we call liquidity again. So there's just pools of money they got to collect. So right now we're in an accumulation phase of the market. And what that means is when the market's accumulating money, it's rising up. So this whole time on this weekly, we've just been accumulating money back from all this money on the left side. Just been getting it back. But the distribution would be something like this, where after they've accumulated so much money, they have to start giving it back off and sell it off. So this is a distribution phase. So this is why the consolidation phase is just price moving sideways. It's price moving sideways before they decide where they want to accumulate or distribute the funds. So if I go back down on the 4 hour, the same stuff plays out. So these would be like your consolidation, right? And this is your bull flag. Price breaks out and then wipes out money to the left, which causes this to accumulate. And then same situation. So this also could be another, bull flag, but the likelihood is again up in the air. I wouldn't really touch this unless you had very clear entry information. But again, this is all liquidity. So we'll go here. And I will give you guys a heads up. My review days, as far as my market analysis days, those videos will be longer. So if you guys have time to sit down, and that'd be the best time to watch it. And that's why I want to try to get more consistent at getting them up on Sundays. But it's mainly because I was working all weekend. I didn't get around to it. So I figured I wasn't going to be trading anyway, unless I saw a really good setup. And that was what I took here with AJ. So, and it looks like it's popping off. So yeah, this would be a, sorry about that, a potential setup. And this is where I'm going to show you something. This is kind of where Real Rise Strategy would play in part here, because they have a situation where their entry method is this. Break a structure right here. They had another break a structure back here. So it's a double break a structure, right? All right. As a matter of fact, let's see something real quick, because I like how this is setting up, honestly. Really, really do. Just broke out the trend line and all. So we'll just take this setup, and I'll do it at 1%. And then again, I like these setups because I know that at least price will move immediately in my favor for me to protect my position. And when I can protect my position, whatever happens from there happens. I really don't care. If I get stopped out, it is what it is. If you feel like you want to know if you get stopped out, you can put an alert at where your break even is. And that way, if it ticks you out, you can come back and look at the market to see if it'll still respect for you to get back in. So I go back down go back up to the 4 hour. Again, it's 9 o'clock. So price looks like it's trying to go bearish. And if I were to look down lower, this is where I would go and add the block that caused the break. This was the last up candle before the down move that caused this low to break. Okay, and this would be my institutional block, my order block, or Real Rise block. And if I go down to the 15-minute, or actually I can go down to the 1 minute. See, price had a situation where after that second break of structure, hold on, let's go back up to the hour real quick, just so I can make sure. Okay, so it happened right. So this is where like entry precision, you'll get taught this stuff in the academy. And I literally learned it and was able to adapt it very quickly because I was like, I know I won't see it all the time, but when I see it, it'll make sense why I'm, what's going on would happen after that. So basically I'm looking for a double break of structure on the 1 hour. So the price broke its structure here, came back and tested that structure, broke with this wick, came out, broke its structure again. So that's 2 breakage structures. And then now at the peak of that second break of structure up here, price, the pattern we're looking for is for price to create liquidity, come back and swipe the liquidity, and then leave after that. So the motion of what that would look like would be price comes up, creates a pool of money. Okay. Comes down, tests. It comes up, wipes that money out, right? So this is how we know institutions push to grab what they left behind. Then they're going to come back out and wipe out everything on the downside. And that happened right here. Okay. So once they close below this, now on that next pull up, this is where you would have got in. You got in around this zone. And you could have found a smaller block down here. So again, that's all extra detail you'll learn, but that's the motion I kind of saw in this zone here, which makes me understand why this is all just down selling pressure, which is why I'm going to get in on a continuation furthermore. But again, I like to stick to that 1 hour, 4 hour pocket range because I'm dealing with the higher frames. So if you want to get a really specific entry, you would have probably found your entry somewhere around here. And then you could have took it down. And notice how the squeeze of your stop loss makes this a much greater return, and price does what? Doesn't really come back. Because again, when that situation happens, it's an institutional move. That's something that not a retail traders are not going to really cause that type of manipulation. So when you can spot it, that's all the more better. So here you go. Delete that. Delete this. The same thing happens vice versa on a buy side as well. So it would be the same situation. And that's just one of the 4 entries they use. So again, we'll take all that off for another day, but let's keep it going. So yeah, we'll see what's up. I like the momentum shift here. So we'll see how this next candle behaves. If it stays under the stop loss, that's perfect. And then we know we're going to trail down and money's left behind on this whole trend. So hold on, let's do this real quick. If it respects, then I just know, again, that's high time frame override. That's really not a normal move. That's just the high frame wanting to keep going. Boom. Go back down to that hour real quick. Like this area. And to do it like this, keep it kind of in sections, because at least I know when price falls into it, now I know I can keep reading price in the same structure if it's going to fill this position. So yeah, liquidity, top, bottom. Boom. All right. So yeah, let's see what the vibes are with that. I like that move. So that is a 1% move. This is $1,000 move, and I'm only risking $250 of the 25K account that I'm trading here. So I'm trading for my test account to get funded. So that's why I'm just looking for those pocket move positions that could finish in one day. So here we'll go down to GJ. Ooh, okay. Okay. So it looks like price wants to, it threw a buy. Let's start from the top. Yeah, it looks like it threw a buy for the week already. It looks like it already did that. And now we're coming back down. And I like the way that movement is, because that's telling me we could keep selling lower. But the way the daily looks, we would have to kind of pay attention to this daily candle. But at 12, if this candle right here is confirmed this sell, we can look at this as like a potential retest to this previous high right up here. So let's go like this real quick so I can look for more specifics. Again, this is also one of those charts where it's like, I don't really need to touch too much because our swing highs here, our swing lows here. So we're still kind of playing in that same range or zone. And we can see price try to come and wipe the swing high, and it definitely got rejected right here. So that's telling me more that, okay, this could be the push down that we're going to get for the start of the week moving into the middle. So I could look at that as, and then if I'm going to fine tune this, put my blocker right here. Boom. Right. So if you're patient, you can wait for price to get to your points of interest or near your points of interest, because again, price isn't perfect. And then from there, read the reaction around it to know what's going to go down. So this previous one was from this buy up, because now they broke through it. I can kind of remove that, and we can start looking for the ones that are pushing down the price. So this would be another situation. So here we have that, and price be going this way. Okay. Let's go down to 15-minute. Looks good. Looks good. I ain't gonna lie. Go back up to the 4-hour. And again, we're an hour into our candle, and an hour in, the last hour was this candle. Last hour was selling. So at 7, we had a little bit of a buy. Now at 8, this whole 8 o'clock, we was just dropping. And again, this is one of those moves where, like, when you get in, you can be a little bit more comfortable, knowing that as long as price creates those structures and patterns, and it looks like it's going to move in your favor, you can secure that stop loss immediately. So I dropped to the 5-minute. That looks good, yeah. We'll do a 1% on that, and we'll take that sell down. And then we'll just see if price causes it to, if the high time frame causes that override. For 12 o'clock for me is important to know what's going to happen with this candle, because at 12, this 4-hour candle that we're on could simply just throw a wick and be back up here. So this is why I put my stop loss up here, because I wouldn't want to be in if price got back up here around 12. It doesn't make sense. So if it does stay down here, we know now price is trying to shift and continue. And again, I'm always targeting, depending on what price is showing me on the low frame, I'm targeting either the TP1 on my daily to the downside or the upside. So in this case, the downside. Let's go to the 1-hour. And yeah, we'll let that ride. We'll let that ride for now. See if they fill this position. And what I like to do personally for me is set an alert halfway at the halfway point. So if I know this actually helps me not even look at the market as much now, because if I place an alert on both sides, so if I place an alert on the downside, it'll trigger on my phone. I'll look, and if I know we're back up here, price is likely to reject. If I know we're down here, I'm understanding that, yeah, price is going to break these lows and probably continue lower. And it's also telling me I can now move my stop loss to break even, and now I don't have to worry about what's happening. So I like that. All right. And now for GU. So GU, we had that strong sell-off from last week. This is gonna be our last one, and then I'm done for the analysis. Take this off. We'll move that out the way. Take that off. And notice like how easy this type of work is compared to like always having to adjust trend lines and do all that extra work, because you can do it on a smaller frame and know like, okay, it's well worth it because at least I can get the details of the week. I'll take off all these real rise blocks here. We'll start looking for some new ones, just clean up everything. So take off the daily open for now. And here we go. So swing high because this caused this swing low to break. It's our new swing low. Price is trying to come back and retest. And we also broke out of our weekly low here. So price may just keep bouncing around here. And then we may get that new push down to fill the wicks to the left here. Should be all the way on this side. So we're at the first wick right now. This would be around the middle of the second wick, and the second wick down here at TP3. So for price to continue lower, we would have to see a lot of consolidation going on either the daily or the 4 hour, like a really long sideways movement. So like something similar to this really for the daily, and that's if the weekly wants to move. So this is when I don't know, GU is very volatile, so I don't like to mess with it too much unless I see a very clear move. So in this case, we have our swing high, swing low. We have a real rise block or our point of interest here, or order block, whatever you want to call it. And right here, we have another one where price went up, and causes it to wipe out right here. So the last up candle is that, which is another point of interest, which is probably why we had this rejection here. So that's confluence. So here, for a rise block. So that's confluence. You have two reasons that price would react off of that. And now price is respecting our swing low at the moment. So again, in this next hour candle or the next 4 hour candle, we can see how things want to react from there. If it decides it wants to be buying up, we can expect that, all right, maybe at this next point of interest, it'll, we'll get that reaction to sell from. And then we can zone in on our 15 and our 1 hour to find a specific move or setup. So yeah, that's that. That's all it is. That's all my update for the week. From there, we'll just watch how things play out. And I like to keep my risk to reward very confined. So here's a good example of like price has moved in my favor. And now it broke the previous low here. So let's protect the position. And this is the name of the game. All right. Hold on, I got people blowing me up. I got to get to work. So here we are. Boom. So now it's at risk free and I wait. That's all I'm doing. But yeah, thank you guys for coming through again. I know this was probably a little bit longer. I was planning on getting this done yesterday, but again, Sunday or Monday, like if I don't drop it a video Sunday, just expect it to come Monday. So I'll be trying to follow up either Wednesday or Friday at the end of the week to show you guys what happened throughout the week. And then from there, we'll take it on forward. So thank you guys again for coming up. Please drop a like, share the video if you feel like this is useful to the next person that may be struggling with trading. And that, any feedback right now is greatly appreciated. So you guys have a great day. Thank you for coming through High TF. Peace out.